My viewers say, when Dinshaw is there, please ask the next multi-bagger idea. That's a reputation you have. It's a good reputation to have, by the way.
So Nikunj, I remember our chart pe charcha, which we did in September, and one of the questions you asked there was that are we contrarians? And our response was that we are probably early in our trade, and that's why we consider us contrarians. And I think in that same interview, you asked us about our view on IT, and we said we're negative. I think that's a classic example to give you that how we early in our trade and how it proves over the longer term. So, having said that, the next multi-bagger ideas, we're still looking for them, right? So let's be very clear about this. But anyway, the fact is that. Our feel is that the market per se will look very exciting in the second half of the calendar. The first half, and we've been calling this out for a while now, that the first half will be in a tight band because we don't see the globe, the world markets pulling up much going forward. And that's why our belief is that India's inherent strength will ensure that the underperformance that it's been going through till date will further, we will rather improve and they'll reverse this trend. We'll probably be an outperforming market by the end of this year. And the bulk of the returns that you see, which we expect the markets to log a return of some 13, 14% over a calendar year, I think that bulk will come in the second half of this year.
Uh, are you now tempted to look at IT? Because a year ago you sold IT and I asked you why. So I'm asking you now, why not?
Okay, so the call here is that, and frankly, I mean, we've been saying this for a while again, that June quarter is when the real poison will come out, right? Because you saw the March quarter numbers, and everybody was very euphoric about March because, I mean, for some reason, the IT players didn't call it out in their December quarter numbers, and finally, the shock that they got at the end of March was not taken well by the markets, I suppose. But the fact is that they entered the June quarter on a downtrend. So you can expect that probably this quarter will be the worst off quarter. And even then, I mean, if you look at the valuations, I think still the street is quite high on the numbers, on the earnings bit. They haven't cut the numbers justifiably. We believe that that should come off a bit. And as a result, the valuation that you're seeing today, maybe they're at 10, 15% premium to the pre-COVID levels. But our feel is that once the numbers are cut, you'll see another 20% odd kind of valuation premium, which is going around the market, which is not justifiable, given the fact that you're not talking about mid-single digits kind of growth rates, which is akin to what the pre-COVID levels were. So your valuation has to come back in line. I think the excitement was because of COVID, and that got waned off. And I think now the valuation should come back in sync.